Welcome to the video on the total loss trap, why you can be not at fault and still end up stranded. In this episode, we will unpack what really happens when your car is declared a total loss, why timelines work against you, and exactly how to secure transportation without making desperate, expensive decisions. We will move step by step, from rental coverage to financing under pressure, and end with clear action steps you can take today. Here is our agenda. First, we will define what a total loss actually means in practice. Next, we will examine the rental car clock and how to push it forward using the at-fault insurer. Then, we will cover financing under duress and the pitfalls to avoid. After that, we will present bridge options you can deploy immediately. We will include negotiation scripts and checklists, a short quiz to reinforce learning, and finally we will deliver key takeaways and a brief disclaimer. Let's start by naming the problem. When your vehicle is declared a total loss, the lender payoff and any GAP settlement often lag behind your urgent need for transportation. Meanwhile, your rental coverage from your own policy tends to end shortly after the settlement is issued. This time mismatch leaves you exposed and creates pressure to accept bad financing. We will address this with a calm, stepwise plan. In practice, a total loss means that your insurer determines the vehicle is not economical to repair. They issue a settlement, which is used to pay off your lender, and GAP insurance can cover any remaining balance. However, this payoff is not instantaneous. While you wait for the lender's balance to clear, you typically cannot secure new financing. Compounding the problem, your own rental car benefit usually ends shortly after the settlement is made. This mismatch between financial timelines and transportation needs is the core of the total loss trap. Pay close attention to dates. Once your car is declared a total loss, the rental countdown speeds up. Your own policy typically stops covering rentals shortly after settlement. Therefore, before you reach the end of your benefit, you must transition to the at-fault driver's insurer and demand ongoing rental coverage. State explicitly if you require a vehicle for work or medical appointments, because that supports the claim of reasonable transportation needs. In the first 24 to 48 hours, documentation is critical. Capture claim numbers, adjuster names, dates, and any commitments in writing. Request the total loss letter and a clear payoff timeline from your insurer. Simultaneously, contact the at-fault insurer and request ongoing rental coverage, citing your need for transportation for work and medical appointments. Ask for written confirmation of rental authorization and the expected duration. If your request stalls, escalate to a supervisor without delay. When calling the at-fault insurer, use a clear, concise request. Emphasize that you are not at fault, that you require transportation for work and medical appointments, and that you are requesting reasonable transportation until you are made whole. Ask specifically for direct billed rental to avoid paying out of pocket. If they push back, request a temporary extension and explain that you will mitigate costs by choosing an economy vehicle. Always confirm the coverage class, mileage limits, and rental duration in writing. If needed and appropriate in your jurisdiction, advise that you may file a complaint with the state insurance department. Laws and standards vary by state, so verify local regulations. Your own insurer is usually faster to start a rental, but tends to end coverage shortly after the total loss settlement, which can leave you without transportation. It may also be confined to strict policy caps. In contrast, the at-fault insurer is generally responsible for providing reasonable transportation until you are made whole, which can translate to extended coverage if you're diligent. However, it often requires assertive requests, escalation, and written confirmation. Direct billing reduces your exposure to out-of-pocket costs. Until your previous loan is shown as paid off, many lenders will not approve new financing. If your credit score has dropped, your APR could be significantly higher. Avoid committing to a long-term loan while under pressure. Watch for tactics like yo-yo financing or deferred payment promotions that conceal higher total costs. Shop several lenders, especially credit unions and local banks, and seek pre-approvals. Focus on short-term solutions rather than long commitments while you're in crisis mode. Here is a practical menu of bridge options. The at-fault rental extension should be the first attempt, because it can be fast and free if direct billed. If that fails temporarily, consider an economy rental on your own dime if reimbursement is likely. Car share can be cost-effective for short or urban trips. Short-term subscriptions or 1 to 3 month leases provide predictable monthly costs if rental is denied. A credit union personal loan may offer lower APR than dealer financing, but note the credit inquiry. Also consider employer or community transit to bridge commuting needs while the claim processes. This pie chart illustrates the typical exposure areas after a total loss. Rental and interest increases can quickly consume your budget if you do not act. By shifting rental costs to the at-fault insurer, you preserve cash. Selecting short-term solutions minimizes the time you are exposed to higher interest. The key is to avoid locking into long-term loans during the period when you feel the most urgency. Quiz time. Who should you demand ongoing rental coverage from after your own rental benefit is set to expire, assuming you are not at fault? Option A, your own insurer. Option B, the at-fault driver's insurer. Option C, your lender. Option D, the rental agency. You may pause the video now to think about the answer. We will discuss the answer in the next section. The correct answer is the at-fault driver's insurer. They are generally responsible for providing reasonable transportation until you are made whole, subject to your local laws and documentation of need. Second quiz. True or false? You should rely on a future personal injury settlement to pay for today's transportation needs. You may pause the video now to think about the answer. We will discuss the answer in the next section. The correct answer is false. Settlement timelines for personal injury can take 6 months or more, and you should not rely on those funds for immediate transportation. Instead, pursue bridge solutions, like at-fault rental coverage or short-term financing. Use direct, polite, and specific language. Ask for written confirmation of direct billed rental, the vehicle class, and the end date. If you encounter delays, request a supervisor and document your need for work or medical appointments. Emphasize that you are mitigating costs by selecting economy class, if necessary. Indicate your intent to file a regulatory complaint if reasonable transportation is denied. When discussing financing, request no prepayment penalty, a short term, and the best APR. Here are the quick wins. Move rental coverage to the at-fault insurer before your benefit ends. Get everything in writing. Use short-term solutions rather than panic loans. Shop multiple lenders, and do not depend on future settlement funds for today's transportation needs. This content is for general information only and does not constitute legal, financial, or insurance advice. Laws and insurer practices vary by jurisdiction. Consult a qualified professional and confirm requirements with your state's Department of Insurance. To wrap up, act before your rental benefit ends by transitioning to the at-fault insurer. Avoid long-term, high APR decisions made under pressure. Use bridge transportation and short-term funding to gain time. Document everything. Escalate when needed. And secure written confirmations. Plan calmly to protect your credit and cash flow. Thank you for watching. If this video helped you, please like, share, and subscribe. Share your strategies and experiences in the comments so others can learn from them as well.